in 1924, so exactly 100 years ago in London, you had the Dawes Conference, when Germany went to Britain and France and said, guys, we have too much debt. Can you forgive us some of that debt? And they said yes. And then they went to America and said, can you forgive us some of our debt? So you had this debt conference. And my very, very speculative idea is that we may end up in another world debt conference.
Welcome to Longview Conversations with our regular podcast where we talk to people in the world of finance, geopolitics, economics, actors throughout the global financial markets and get their take on life. I'm actually thrilled to introduce Mike O'Sullivan to you today, who's on the screen with me now. Mike, welcome. It's lovely to see you.
Chris, thank you very much. I'm a big fan of Longview, so very pleased, very flattered to be on the podcast.
Well, it's an absolute pleasure. We're going to have a lovely, fantastic conversation. There's a lot of topics. Mike, for those who don't know him, has got an awful lot of fantastic history in markets as an economist, as an investor. He's currently senior advisor at Westec and Moonfair. Moonfair, I believe, is a private equity platform that you might tell us a bit about. Yeah. 20 years of experience with the likes of Credit Suisse as a CIO, very senior in that organization. And of course, author of a fantastic book called The Leveling, and also involved in a documentary coming out on BBC Radio 4, I believe, about waking up to world debt, which we'll get into, I'm sure, over the course of this conversation. And also a member of the World's Economic Forum's Council on the New Economy, and multiple degrees and multiple attributes over the years. So, Mike, really good to have you on.
Thanks, Chris.
And really looking forward to this conversation. So I appreciate it. So let me introduce the topic and the conversation with a quote from your book, Mike. The opening 2 paragraphs that I'm going to read, which should be very familiar to you. The book, of course, called The Leveling. Chapter 1, Brexit, Trump noise and disruption. And I'm going to read the first 2 paragraphs. So that our world is changing at a tectonic level is close to undeniable. Yet we often do not seem able to see beyond headline-grabbing events of recent years. The election of Donald Trump, Brexit, and new governments in Mexico and Italy, to name a few. I should just mention this book was published in 2019. These events simply represent the smashing of the old order. They are the detonators, the wrecking balls of the system that has grown up since the fall of communism. The leveling is about how the center of gravity in our world, societies and economies is changing, the confusion those changes create, and the ideas that will help bring new structure to what is a disordered world. Absolutely fantastic opening couple of paragraphs. And I want to kick off really this discussion with really, in a sense, probably the question is, can you expand? In a sense, your book is in part about globalization is over. Can you outline that theme and then we'll get into where we go from here?
Yeah, so Chris says investors are not used to looking back. This is the one time maybe in my career I'm glad someone has brought up something I've done in the past where I've sort of got it right. I'll give you a bit of history because I've had this fascination with globalization for a long time. So I started my life as an academic and then moved to investing, but kept writing books. And the first 2 books I did were on Ireland and globalization. One was called Ireland and the Global Question. And the reason for this is that, sadly, Ireland's had this long history of economic underperformance, but around the 90s, it changed dramatically. We saw the rise of US multinationals investing in Ireland. Irish society began to change, became more Europeanized. And curious about these changes, I started to put them together. And at the time, Ireland was feted as the most globalized country in the world in the 90s, 2000s. Ironically, countries like Chile, China were sending envoys to Ireland to learn its secret. And that as you know, that's always a bad sign, because then the economy came apart.
Hubris.
It's a perfect sign of hubris, and I think Ireland was on several Economist magazine covers as being Europe's shining light. So again, always a time to sell. But the passage of globalization through Ireland fascinated me, and then I, in the leveling, took it a bit further. And maybe just for folks who know Longview very well, what I like about Longview is you have this idea of regimes and market, that the market is in a risk-taking regime or it's in a risk-off regime. And what I'm also interested in is in these super long cycles of economic and political regimes. And we've had two such regimes in history around globalization. So one from 1870 to about 1912, which ended very badly, war, economic crisis, etc. And the other one we've had from fall of communism to, I would say, I mean, if you ask me to put a date or an event, it's the snuffing out of democracy in Hong Kong. Because democracy is part of the rise of globalization. Hong Kong for a long time has had very close links to the West, to Britain in particular, and it's been a representative of this global trading order. So the fact that the Chinese have introduced their security laws and sort of, silently but malevolently, I think, taken Hong Kong into their own domain is sort of, that's a wall coming down on globalization.
So just to be clear, you would date that as sort of 2 or 3 years ago. I forget exactly when that law came in. But is that the point in Hong Kong? That's your thinking?
So that's so I think the bookends of globalization would be the fall of the Berlin Wall and then the fall of Hong Kong's democracy. And as you noted at the start, lots of events preceding that were shocks to the system. Brexit, Trump, etc. We have the contagion of that in France today. We'll chat about that later on. And I think what's interesting is that many of us were probably roughly the same age. People have had their careers during that era of globalization. London as a city has thrived during that period. So we're used to this. We're used to a period of, or we had been used to a period of kind of low inflation, geopolitical calm, international trade and finance. And this is the interesting thing, is to begin to attune our mindsets to the fact that this is changing. And we're going back to something that's maybe more representative of the history of the last 200 or 300 years in terms of how economies and politics tend to work together.
Yeah, it's interesting you say that, because I remember, like you say, we sort of got going in the 90s in our careers after the fall of the Berlin Wall, when the peace dividend was at work. And I remember I used to have this chart of the S&P 500, and I would put on these great political events that had happened over the last few decades. And until, I don't know, 10, 15 years ago, none of the events really mattered.
Yeah, exactly.
They really, the S&P just went up. It might have gone down for a day or two, but basically it shrugged it off. Now, I mean, some people would say the S&P is still going up. Of course it is, but you think of the European crisis, for example, as a very significant geopolitical event that really did a lot of damage to those economies and that market and so on. So it's interesting. So globalization is over. It's bookended. Its end is bookended by the Hong Kong introduction of security laws, which seems very reasonable. I'm sure people could pick different dates, but that seems to me very sensible in what it says about China and the multipolar world that's coming. And then you have this theory, we're in the sort of interregnum, where we're trying to find our way into the new global world order. Describe the interregnum as you see it, and how that plays out.
Yeah, so we have, I think, in today's world, which is heavily saturated by social media, I think people have a desire, maybe a need for certainty and framing. And the problem with the interregnum is that it's not certain. It's very noisy. It's very chaotic, and there are lots of things that are falling down on one hand and lots of things that are being built up. The word, which is a lovely word, interregnum, comes from the period in British history in the middle of the 17th century, when Charles I had been beheaded. Then you had this experiment with democracy up to Charles II. So it was a period of experimentation, of uncertainty, of turmoil. Fittingly, we now have another King Charles for this interregnum. So the interregnum is really a sort of an in-between phase. And I know you like these long cycles of economics as well. And if you look at some of that theory, you know, the fourth turning, I think they would all suggest that this interregnum will last maybe 15 years or so. And I would break it. It's very hard to give people a clear answer as to what it is, but I would break it into two parts at least. So one is the coming to terms with the excesses of the last 30 years of globalization. So they would be climate damage, the accumulation of massive levels of debt, and maybe artificial relationships in the financial markets, like the effect of QE, and then also the crisis of democracy that we are in at the moment. So that's sort of the bad stuff that we have to overcome, and we have to get this detritus out of the way before we can move on to the next thing. And then the next thing is going to be based around new technologies. AI is very prominent in the public consciousness, but the same thing is true of genetics. We'll also need to create new institutions to marshal these new behaviors and new technologies in the same way the IMF, World Bank, etc. were created about 100 years ago. And then a bit like football, there's a sort of a league table aspect of the rise and fall of nations, which is really being accelerated. So when globalization started, I think the British economy was bigger than China and India. Now it's dropping back behind those. And, you know, around the world, you've all these countries and economies and stories that are really rising up, from Indonesia to Poland as a power in Europe. So it's a fascinating time. It's challenging. There's an awful lot up for grabs. The rivalry between China and the US will be instructive. What kind of world system do we have? Is one of rules, or is it one based on hard power?
So it's interesting. I mean, there's a lot to unpick in that and in that interregnum. Let's start with the indebtedness theme, because I know you've been doing a lot of work on this. We've discussed this, you and I, many times in the past. The sort of debt super cycle, or you know, as we were writing about yesterday, we live in a debt financed monetary system that just needs more debt to grow the world economy, or that seems to be the way it plays out. How does this get resolved? Because it's not just, you know, there's a little bits of pieces of good news. The UK and US household balance sheets deleveraged for the last 15 years relative to the economy anyway. You know, US corporates aren't particularly leveraged, actually, when you look at it in net of cash. But the world in aggregate, we have this sort of theme, we call it pass the debt parcel. There's one part of the world in every economic expansion that's always leveraging up aggressively. And of course, this last phase has been China, where the numbers are staggering. You know, private sector debt to GDP in 2008 in China, 100%, now 300 and something percent. In absolute, you know, renminbi numbers, it's 44 trillion just in the private sector to, I think, 350, 400 trillion in 15 years. So staggering numbers of debt. And of course, China happens to be the worst offender in the last decade, but there's a government indebtedness and around the world, and we've all been focused on the US Treasury and the amount of debt that's coming there. So how does this get resolved? How does this play out from here?
Loads of stuff to unpack, and by the way, the BBC4 radio documentary is out. So if people want to listen to it, it's you know, type in "Waking Up to World Debt." Great contributors, people like Barry Eichengreen, Ragan, Rajiv as well. So it's real
fantastic.
fun.
And we'll put the link. We'll put the link
Right.
in the under the video.
What is scary is if you go back, let's say 250 years in economic history, and you look at debt to GDP. So the leading countries of the world are the most indebted they have ever been, except the world wars, which was an emergency, and then interestingly the aftermath of the Napoleonic Wars. And that's interesting, because the way in which Britain resolved its debt load and reconfigured its economy, it was effectively the genius of Pitt, William Pitt the younger, meant that it had the financial and economic power and flexibility to surpass France as the European and world power in the 19th century. So I think the first thing to flag is that all the big economic zones, the US, China, Japan, France, and England, are heavily indebted. And there's a geopolitical element, because whichever of them can get rid of that debt the most quickly and most efficiently will be at a head start in the race to be the superpower of the 21st century. On China specifically, China is very curious. It reminds me a bit of Ireland in the 2000s, because Ireland at the time didn't have much government debt, but it had huge, badly formed private debt, which was then taken onto the government balance sheet. And the issue with China today for us and sitting in London today is that the transparency on the Chinese economy and policy is getting worse. I mean, I've got various friends there and other places, and you can sort of get a sense as to what's going on, but the level of transparency for Westerners as to what's happening in China is really not great, and that makes it harder. And I know the Chinese are super vigilant on this, and they're looking around the rest of the world at how other countries have resolved their debt loads. And I think eventually the Chinese bond market will deepen and become more sophisticated. But this is an almost existential event for China, because the contract between the Chinese government and the people is that the government gives them prosperity in return for their silence. But then if you have hundreds of millions of people who eventually don't have a job and who have weak personal balance sheets, that's a huge issue politically. So I think this is probably the most interesting case. You mentioned then the US, and interesting for the US as an empire today and as the dominant empire. There has never been an empire that has survived where it pays more on interest payments than military spending. The US spends a lot of money on military spending. So again, that gives you a sense of the existential and geopolitical element here. And my own worry, and I know you've written lots of stuff on reforming the city and reforming finance, is that the accumulation of debt is correlated with a lot of things. It's correlated with, if you can do a chart of debt to GDP worldwide with the excess global temperature. So they fit nicely on a chart together. So the world's got hotter as we've taken on more debt.
Yes, you're not suggesting they're causal. It's coincident, I think is what you're saying.
I think it's coincidental. And what is also interesting is that debt has increased as productivity has decreased. So we're on the cusp of an election in the UK, and I think that the really profound economic issue in the UK is productivity and how to get that back. And I feel that the Western economies are a bit like an aging athlete that's losing his or her speed and is kind of taking on debt effectively to look better. And then the other thing to make this more complex, I think, is that central banks are conniving in the accumulation of debt. They've managed to suppress the signals from debt markets, I think. And in Japan, they have become the debt market themselves. I mean, the Bank of Japan, as you often point out, it is the bond market. It's eaten the bond market at this stage.
So what is that? But where does that leave us? Because you remind me of two things, actually, as you say that. The sort of famous Rogoff and Reinhardt, once government debt to GDP gets over 90%, productivity tails off and is impacted. And you can see why that might be. The government's too involved in the economy and it's typically less productive. It certainly reminds me of that. And then I'm reminded, and this might feed a bit more into the democratic crisis theme, but my sort of, favorite worry stat, if you like, about the UK is we have 9.1 million people. So let me get the numbers right. Sorry, we have 20. So we get 12 million people on pensions that they receive from the government. We've got 6 million people employed by the government, and we've got about 6 million people either unemployed or on disability benefits. So it's 24 million people, and then of adult age, and then you have 27 million people who work in the private sector and pay taxes, and 2 million of that 27 don't pay taxes. So it's 25 plays 24. So from democracy's point of view, if you're very sort of raw about it, turkeys don't vote for Christmas.
Yeah.
So there's as many people who are going to vote for the government simply because they're effectively paid for by the government as there is people who work in the private sector, some of whom will vote for more handouts. So how does this get resolved, this indebtedness? Because as you say, productivity is dwindling and the government is giving out the candy. And it just seems harder and harder to get elected in a democracy to deal with this problem.
Yeah. So I'll give you one very speculative scenario as to how it gets resolved in a second. But I think until it gets resolved, what is going to happen is that debt, a bit like climate damage, it becomes part of our lives. And again, when globalization got going, that was the time when the euro was being formed, and we were all told about the Maastricht criteria. You can't have debt to GDP above 60% or else. And we had the Asian crisis when debt levels were actually not that big at the time. The US had debt to GDP of 40%. So in a way, you and I are conditioned to think that, oh, if a country passes its let's say 80-90%, then we should instinctively
Yes.
or jerk expect a crisis. And the fact that that hasn't happened, to me, suggests that the world economy and the financial system is sort of evolving around these debt loads. So we have the rise of the private credit market. We have enormous numbers of fintechs in London who are doing buy now, pay later. So that keeps it going and maybe stores up the risks for later. And I think until we get to later, debt will change politics in a number of important ways. It will severely diminish fiscal space. So governments won't really be able to do very much to, in a Keynesian way, stimulate the economy. That's been the case in France for a long time. It'd probably be the case early on, I think, for Labour. And what that does then for politicians, it pushes them to fight another terrain probably on the issues of identity, value, immigration. Again, France is probably the example. I think the UK is interesting in that the Labour government will probably introduce a level of boring calm to policy making, which I think would be good for the economy. It's already very clear that the promises that they were making maybe a year ago on green energy spending can't be met by the government balance sheet. So I think what we will see is governments and really big investors, be it sovereign wealth funds, the big pension funds in the US and Canada, do a lot of this stuff together. And I think that's kind of the plan for GB Energy, is that they try and act as a focal point for some of these international investors. So that's kind of how we get by with all this debt load in the interim. And I don't think there's any magic solution to that. Then the textbook solutions are inflation. Growth is obviously my favorite one, which I think is why productivity is so important. Education, rule of law, all that sort of stuff needs to be rediscovered by Western governments. And then we come potentially to an end game. So if we go back to the first period of globalization, ended in whatever 1912, you had the accumulation of financial risks, you had the First World War, and then afterwards, part of that in 1924, so exactly 100 years ago in London, you had the Dawes Conference, when Germany went to Britain and France and said, guys, we have too much debt. Can you forgive us some of that debt? And they said yes. And then they went to America and said, can you forgive us some of our debt? So you had this debt conference. And my very, very speculative idea is that we may end up in another world debt conference. And I think it could happen somewhere with a good bar like the Raffles Hotel in Singapore, because it's sort of it's a geopolitical midpoint between the US and China, where the great powers get together and this kind of carving up of debt and repackaging of debt, etc. Because it's very hard to see how all of the big economies can reduce debt at the same time. And the final point to make is that in financial markets, when everyone does something at the same time, that can produce a brilliant trade or trend, as the US banks were doing in the 2000s in the housing market, the mortgage market. But the fact that they're all doing the same thing, eventually just that it accumulates that risk and it makes an end solution a lot more dramatic.
So sorry, are you saying we're in the phase now when everyone's doing the same thing, or are you saying that might come after this debt conference?
We are in the phase now where everyone is doing the same thing. China will accumulate more debt because it's absorbing more private debt. The US, it seems, is in a mindset to increase its debt and not to cut its fiscal deficit. And I think if Trump is the next president, that will become even more difficult.
Yeah.
I think in Europe, Britain and France are probably at the limit of their debt and will be constrained in what they can do. And then Japan is just heavily indebted. So we're still, I think, at the margin accumulating debt across the nations of the world. And that will go. I think that will go on until there is some crisis, and I suspect that crisis will come with a flaw in one of these magic solutions. So one of the magic solutions that central banks just suppress and hoover up this debt, and that could be Japan. You just get this, terrible move in the yen, and then people begin to price in balance sheet risk to other currencies. That's just a very speculative kind of scenario. I don't think we're there yet. We probably need to be provoked by another leg higher in inflation, maybe.
What about, there must be other ways there obviously are other ways it might play out. As you said, it's very speculative. But the other aspect I think is quite interesting of this is, this idea that indebtedness leads to poor productivity outcomes, which is essentially what we've been talking about. And of course, poor productivity outcomes means the majority of the population have poor real wage growth.
Yeah.
So those two correlate pretty well, productivity and real wage growth for middle and lower incomes, not the super rich. But so and I would argue that's a massive contributor to divisive politics. So is there not a path that and we've seen it in Europe, it's becoming increasingly right wing. More of that in France at the moment. You think about Europe, Holland's right wing, Italy, Austria, Germany, the AfD are rising, and in France they could well be winning election, and we'll get onto that. But is this not part of what's underpinning this? And could there not therefore be a different scenario whereby a more extreme party comes up with more extreme policy outcomes that either kickstarts a crisis or in some other way changes the system? Is that something you see as plausible?
In a way, I think doing all the good things from a policy point of view are difficult because they don't win votes. They're hard to, so productivity, trying to explain to TikTok how you would increase productivity and then asking people for the patience for allow that to happen is a big ask to today's and increasingly our politicians, if you look at Ireland, France, etc., they're young, they've never worked outside politics, very social media driven. So I do think that's actually a policy problem. I think what is interesting is that if you look around Europe, you have productive. So France has actually got a decent level of productivity. So do some of the small open economies, Switzerland, Sweden, etc. And most of them are still moving to the right for different reasons. I think not less to do with economics, more to do with things like immigration, identity. So I'm not entirely sure about that link. My fundamental personal belief is that the factors that determine productivity, most of which are public goods like education and the rule of law, are also the things that make for good democracies and stable open economies. And I think at the margins you have more of the rise of uncivil politics and kind of extreme politics, where some of those public assets are degraded.
Do you not think that, I mean, I understand the immigration is one of the hot drivers of the right wing, the extreme right wing, and so on. But do you not think that if middle income was growing in its wealth, it would be less concern? I mean, it's an easy blame, immigration. That's the point.
Yeah.
Whereas actually, immigration on the whole probably adds to growth and mostly contributes to society. It's generally a positive economically, but it's not a positive in terms of people's wealth and their sense of public services. And the deterioration of public services and the wealth all go back to the fact there's a lack of productivity. So I think they must be linked indirectly, or in some senses directly.
They are. So maybe the US is a better example, because you've had for a big chunk of American society until recently, you've had the hollowing out of real incomes, and for large chunks of the economy, you've had the hollowing out of productivity. And actually, American productivity is only just beginning to pick up and get going again. And I think there are big chunks of America where that argument is true, actually.
Yes, and maybe the UK as well. Okay, let's push on. So this democratic crisis, how give us some more color on that and how you see that playing out going forwards in this interregnum, and then we can get on to the positives, I suppose.
Yeah. So and this is the thing about the interregnum, is that not to be gloomy, but you have to kind of deal with all the bad stuff before you can move on to the exciting stuff. So I think the idea of democracy is fundamentally linked to globalization. So no surprise that the end of globalization comes with a crisis of democracy. And many of the things that are provoking electorates today are things you could call the side effects of deglobalization. So the return of inflation. We've not had inflation during globalization. We have it in big chunks now. Stress and security worries about wars and conflicts, immigration because of climate damage and conflicts as well. And having grown up and lived in a number of democracies, I'm personally very, very attached to it. And there is this idea that for the first time ever, politicians in democracies are, for whatever reason, vandalizing their own democracies. So I think if you ask people around the world for their view on British democracy, it's a very, very positive view. People here would maybe be less positive given what's happened in the last the last 10 years. And I do think it's fair to say that Johnson, etc., have vandalized some of the institutions of the country, had a rise in corruption. The same is true of Donald Trump in the States. And I think even you go back to the last, 100 years, it was always an article of faith for Republicans and Democrats that the Constitution, the idea of the founding fathers, the Federalist Papers, all that stuff was sacred and could not be trampled on and could not be abused and traduced. Unfortunately, that's the case today, and maybe half of the American population will vote for somebody who disregards all of that. So that's it's a really big worry, and I think if you've traveled and you've seen countries where democracy doesn't exist, but people really want it. Iran is a good example. You get a sense as to how precious it is. And I think around the world, there are lots of really interesting experiments with democracy. So in Germany, people are using technology to vote at the city level. In Ireland, our citizens' assembly model is famous. So there's a lot of things happening bottom up. One point, Chris, just to give people a bit of context. So the reason I call the book The Leveling is from an obscure but highly important a group of English people in the sort of the 1640s.
I think here we go. Look, this will cheer you up. This will probably cheer you up.
Ah, yes, exactly. Yeah.
Yes, there you go. Yeah.
Yeah.
Yes.
And this is a brilliant a mad period in English history, because around 16 to kind of jump a bit, but around 1648, you had the end of the 30 Years' War, huge things happening around Europe, the formation of the nation state. In England, that was less relevant, but the King Charles had been captured, stuck in the Tower, and for the first time probably ever in a European country, people said, "Oh, we might have a democracy. What should it be like?" So the army decamped down to Putney, and you had the Putney debates, and that was written up as.
And for those that don't know London that well, Putney is down the river, basically, as you're moving sort of west out of London. My compass is not good, but west out of London.
Southwest, yeah. So worth it. If you're in London looking for a walk along the towpath, head down, go to St. Mary's Church. And I think it's one of the most important moments in English history, and one of the most underestimated as well. So the point of saying all this is that there are so many people today in multiple countries who are frustrated with politics, frustrated with how their country is going. And some of them get on Twitter and they get into vitriol and whatever. And I thought that the views of the Leavenworth and Putney debates, which are expressed in these documents called the Agreement of the People, which are short, they're very realistic and pragmatic. I thought that's a really good representation of people writing down what they want from democracy, and one we should think about today. So that's why I've introduced the theme of the levelers into the book. But I've gone completely off.
No, that's fascinating, because you're quite right. That was a wonderful period in British history where democracy, as you say, was established, and powers were wrested from the king, and the people therefore had more of a say through parliamentary procedures that came into being. So it was an incredibly important moment. And I think in your book you spin that into is that Peace of Westphalia around that time, I believe. Is that correct? Do you want to give us a bit of color on that? Because that kind of there's parallels with today. You argue we maybe need to go to a global debt conference, some form of global debt forgiveness, the great powers sitting down together and discussing these issues and cleaning the system up. So talk to us about how the Peace of Westphalia played through into global or European politics primarily, I suppose.
Yeah. So the Treaty of Westphalia was something must have happened in sort of 1648, because you had all these massively consequential events in England and across Europe. So the Peace of Westphalia effectively brought to an end the 30 Years' War, which was a multifaceted war. It was a war of religions, of Protestantism, of the Catholics, a war of princes. If you look at a map of Germany at the time, Germany was divided into all these tiny little princeling states. And the same was true, I think, across the rest of Europe. So it was kind of like Europe was owned by these family businesses and these princelings. And the Treaty of Westphalia, it did a number of things. It allowed these princes to accord to their own religion without controversy, but effectively it founded the idea of the nation states. And from that period, then you had the sort of the coalescing of all these little statelets into these big regions and big countries. So geopolitically, it was a huge thing. And then in subsequent years, you've begun to get these rivalries and these cooperations between these new nation states. And it was also, I think, the effectively the formation of formal diplomacy between countries. And at the nation state level, formal agreements. And then we got into sort of the 18th century, 19th century, which was an era of great power contest amongst the big European powers. So something similar is happening today. So we've had this world order. America's been the dominant power for the last 70, 80 years. We have kind of the Washington Consensus. We have world institutions like the World Bank, the IMF, which are, in some respects, have done what they were supposed to do. Others, like the World Trade Organization, have a crisis of legitimacy and are probably defunct at this stage. So there's a need, I think, to recreate the rules of the game of the international order. There's definitely this kind of contest going on. We're in this idea of a multipolar world where you've got 3 or 4 kind of poles. And how I define that is that it's not just that they're big and strong like America and China, but they do things in very, very different ways. So if you look at the internet, I mean, America's got the Magnificent Seven, it's got the big companies of the internet. China has total control over its internet. So Google's internet share in China between 2006 to 2016 went from 30% to 0. So it's got this wall around the internet, but it has a very vibrant internet or e-commerce economy. And then in Europe, we don't have the big internet giants, but we do have good internet regulation, which people scoff at. I mean, I think it will actually be good for our kids, and we're now seeing the deployment, of course, of the Digital Services Act in Europe as well. So the point is that you have these big regions who are going down their own path when it comes to security, economic models, technological models. America is still well out in the lead. They have this existential struggle for power with China, and I think that's happening a bit over our heads in Europe and the UK. There are not many people, I think, who are aware of the intensity of the rivalry between America and China and the kind of things they're doing to to effectively to nobble each other and to put boundaries around what each other is doing.
It's interesting you say that. Yeah, I think you're quite right. I was at a dinner in New York of politicians and finance people in April, and you can, it's palpable, that rivalry in that dinner, America China, in a way that it isn't when one goes to dinner with those kind of people in Europe. It's less obvious. So how does all this feed into future new institutions? There's obviously the BRICS is emerging. Do you have a sense? So you talked about the World Bank is WTO is defunct, and the old institutions, the sort of League of Nations that birthed out of that came the the IMF and the UN. Where are we going now? How's the world order? What sort of scenarios can you see as we look forward?
So I think in terms of institutions, Chris, I think the world institutions will become less relevant and less powerful. The World Trade Organization is a good example. It's effectively defunct, and what will happen is you will probably have more trilateral agreements between the US, the EU, and China. They'll kind of sort it out themselves. For financial institutions, I think a couple of things will happen. One is that you have regionalization. So Asia already has its own development bank. What is going to be fascinating is if and when China has a debt crisis, and then resulting from that develops its own debt markets, will they still use a kind of a Western template for corporate governance, or will they have corporate governance with heavy Chinese characteristics? And that would be a big thing, I think, in terms of, it'll be a big thing for international investors, a big thing for capital flows and portfolio flows around the world. So, and I think my instinct is that a lot of this will be more regional than global. I think central banks risk becoming caught up in this, that they become sort of the battleships, the monetary battleships in this world order, and that they are forced to politicize or geopoliticize themselves as this great power rivalry intensifies, and it will surely intensify. And there is, on the Western side, there is, and you read about it almost every day now, there are efforts by China, Russia, North Korea, Iran to poke away at and destabilize Western societies and democracies in lots of ways that are just sapping in terms of resource and energy. I mean, today there's a sense in America, I think, that the one of the things that's happening is that there are multiple theaters of conflict opening up around the world where America is necessarily being drawn in. And part of that, just part of it, is to distract America and kind of tie it down in multiple ways. So that's not a terribly optimistic view for the future. It's probably one more that corresponds more to the post Westphalia world of kind of great power competition and competition of methods and approaches of the big regions. One region we haven't spoke about, and I think part of the problem with these discussions on globalization is that we always focus on Europe, America, China. And as a friend of mine said, what about the other 75%? Because you have all of these
in terms of population, you mean?
In terms of population, because you have all of these big populous economies, some of them really successful, Indonesia, some of them very ambitious now, like Ethiopia, Rwanda, Kenya, and some of them, again, very successful as emerging growth models. Many in Asia. Poland, I think, is emerging as a really interesting power in Europe. So what do all of these countries do, and what do they think, and what's their role in this world order? And some of them will sort of say, well, we've watched the evolution of the Western model. We think democracy and rules is the way to go with our own characteristics. Others manifestly, and you've got some cases in South America, are saying, well, we probably need power centralized in one person, and we need to weaken our constitution, and we need to follow the Chinese model, because that's obviously what works in terms of growth. So in these countries, and it's, again, not something that's picked up a lot on, there is this debate as to what is the economic model to follow. And then the other thing, and which is, I think, I find irritating and condescending, is the idea of the global south, that you take all these countries and you sort of put them into a box and that they're all the same, because the problem is they're highly different. And so far they don't really have a coordination mechanism. So that's one of the very, very interesting things for the future is, will countries like Nigeria, Malaysia, who are geographically different, culturally very different, will they find ways of coordinating so that they can be more powerful? And that probably doesn't necessitate the UN, etc. So that's a big open question.
Is not part of that the potential for the BRICS institutions to start playing that role of a coordinator of non-Western, historically globally powerful and still globally powerful nations? So picking up, because of course the BRICS has been expanding, as we know. I mean, more countries are affiliated with it. It's like I don't want to use the term global south, because you quite rightly disparaged it, but it is picking up that geography with members from South America now, from the Middle East, from Africa, I think, and of course through Asia.
It has, and I think some of those countries are hedging their bets, because the two of the big countries in the BRICS, Russia and China, they have shown, they show more and more clearly what their true intent is. Again, I think the fact that it is a dilemma for these countries as to which side to choose shows that perhaps they're hedging. But I think an alliance involving Russia and China doesn't really do anything great for the future economic model of, again, Malaysia or some of these countries.
But if you export to these places, if you're a big exporter to China, as many people are, you in some ways you have limited choice.
You have limited choice, exactly, and I think you have limited choice in terms of trading with them. I think you have a much bigger choice as to how you develop your own country and what your vision for your own country is. And I think debates in many of these countries are actually very fraught and very mixed. So there's a few things going on. So one is we have new geopolitical gangs. So within the BRICS group, you have the SCO, the Shanghai Cooperation Organization, which is sort of the anti-Western countries. Iran is an observer, Russia, China, India is a formal member, but not that active. And then in sort of facing off against that, then you have the Japan, Australia, the US, and UK. So there's all these kind of gangs forming. The region that's interesting to me as well is India and the Emirates. And I think in the period of globalization, you've had two miracles. China is a miracle economy. The Emirates is a miracle. I mean, I remember when I first started my career going to, I think it was Abu Dhabi. There was maybe 3 towers there in the desert, and now it's flourished. So I think there is potential for another kind of geopolitical pole between India as kind of the body, and then the Emirates on top. And they are beginning to sign more collaboration agreements and have trade routes. And they're probably at the stage where France and Germany were in the 60s, kind of coal and steel cooperation. They're not at the stage yet of having the same rules and modus operandi, because they're quite different. But that could be an interesting balance to some of the other bigger powers around the world.
So multipolar world. So let's just take this, the clock's obviously ticking, and we want to get into what all this means for investors, and actually more specifically as well, as we go into this year, there's a ton of elections coming up. You've already mentioned them. France starting this weekend, the UK next month, and then of course America in November, and 1 or 2 others. How as an investor, how does one go about thinking about those things, and how does one go about investing in this world of, multiple crises, or heavily indebted world, as you describe it, where the stability is kind of gone from the 90s and from the period of globalization?
So I think, Chris, what is interesting is that geopolitics hasn't mattered to markets for a long time, right? And actually, you've had these geopolitical trends like the rise of the BRICS and the BRICS funds and ETFs that have been interesting thematic and structural trends. It is mattering more, I think, because we have inflation. So that QE is probably less powerful. It can dull market signals less. And I kind of divide the world into doped and non-doped assets. So you might cynically argue that some of the the NASDAQ and the tech stocks are kind of artificial, because you have this massive option activity. You have often the effect of central banks. So currencies are definitely one way of playing geopolitics, and I think currencies are a good indicator of the health of a country. The Turkish lira in the last couple of years is a great example. I think also what's interesting, you mentioned Moonfair at the start, is in the private investment world, private equity venture, that's getting bigger and bigger as public markets shrink a bit and they become more distorted. And in the private equity world and venture world, you are seeing very strict rules that a US or even European VC or private equity manager will not invest in or with Chinese investors. So I think the sense of this multipolar world is actually more palpable. The second thing is a lot of the technologies in that are going to build dominance, can be quantum computing, defense, AI, all this, totally mind-boggling and dazzling technology. That's happening in the private asset market. And what is interesting is that a lot of it is being pushed by governments as well. And I think Europe is at an interesting juncture where it has to catch up with the US and China, and more resource will be put into that. And then I think if you can do the same if you are a public markets investor. You're probably getting in a little bit later. And then the final thing is on debt. And I guess if we wanted to wait for the debt crisis, we could be waiting for some time. There was a famous German economist called Rudiger Dornbusch, who kind of made his name on, developed an emerging market crisis of the 80s and 90s. And he said, these bubbles, they go on for much longer than you think, and then they turn much more quickly.
Mm.
than you think.
Yes.
And trying to pick up that turn, I think is going to be very, very difficult.
Very hard. So what do you do as an investor then? You've got your, you're advising a pension fund who obviously has global asset
Yeah.
allocation and diversification. How do you avoid these blow-ups, or can you simply not? Is it more a case of managing what occurs?
Do you probably remember this, Chris? With the Credit Suisse Research Institute, we used to produce something called the Investment Returns Yearbook, which is kind of a long with two profs, Elroy Dimson and Paul Marsh. And how I answer that question is I put up a chart of the country and the sector market cap of stock markets in the 1900. So at the time, I think the US stock market was about 20%, or actually less, about 15% of world market cap. The UK was 25%. The biggest sector by a long shot was railways.
Mm-hmm.
And you just ask people then to see, well, how that has evolved over time, because some of the economies in there have been strong, but they haven't financialized, and they've like Germany gone down the route of family businesses and bank lending as opposed to developing a really big stock market. And I think it's a really good way of thinking about how the portfolio of the future will evolve. So if I was to go to the pension fund or to a well-off person, I would say that in the future, your portfolio of the future will probably have more very, very low margin public market investments in corporate bonds, equities. A lot of it is ETFs, because I think the active space is just being squeezed for lots of different reasons. On a 10-year basis, you're probably going to end up having more what's now emerging market debt, but it would become developed market debt. A lot of that could be China. China potentially could be the new kind of linchpin of the bond markets in the way the treasury market is today. There's just a huge question mark over this. I think China has to evolve massively institutionally for that to happen. And then I think you probably have a much bigger chunk of private markets, private equity venture, as those industries grow and they capture a lot of the innovation in economies. I think people will probably have 1 or 2% of their portfolio in crypto or Bitcoin, not because it's an economic asset, because it's just a thing. Highly correlated, I suspect, with the NASDAQ. But there is just it's becoming institutionalized now. And then I suspect a couple of the smaller currencies in the world maybe not disappear, but they become diminished as investing currencies.
And what do you mean by the smaller currency? You mean something like the British pound, or you mean
could even
Swiss
be
franc?
Could even be the pound, the krona, etc., which maybe become harder to invest in for international investors.
So it's interesting what you say about China, because clearly there's one school of thought that China's going to rule the waves and so on, and develop this great big bond market and become a great investable beast. But the trends have been going the other way, certainly for Western investors, which is where most of the capital is still. In the last 2 years, I know many investors in America in particular who won't invest in China full stop. It's now being deemed uninvestable for geopolitical and security reasons, if you like, or something along those lines. So, and also on top of that, we talked about all that debt in China. It's got a tough, I would argue it's in a balance sheet recession. And it's becoming a bit like, very similar to Japan post 1990s. So it's got a long workout period. So even looking 10 years out, it seems to me that's quite a big ask to see China as emerging as a significant or more significant part of a portfolio.
Yeah, so I agree with much of what you said, and I subscribe to the view that the dollar will remain the world's. There is this community of people who think that the dollar is going to disappear, and I think one of the main reasons it won't is that the financial and banking infrastructure of the world is its American institutions, and it would be very, very hard to supplant that, particularly with corporate governance issues around many of the Chinese Asian institutions. So 10 years is maybe optimistic. If you go back to the Eurozone debt crisis, and also go back to Pitt the Younger in 1802 or whatever it was, the way in which you resolve a debt crisis is incredibly, incredibly important for what happens next. You know, you can have a sort of a lost decade or lost 20 years economically, or you can take the hard medicine and, you know, turn things.
But on that point, I mean, it strikes me that China, you know, the signs at the moment are they do not want to take the hard medicine. So they're in the long drawn out resolution.
They are in, I think they're in the phase of, I mean, I think from what I know, they are absolutely alive to, they're different to the Europeans in 2019, where there was just broad denial that anything could happen to the Eurozone and that there would be a debt crisis and or a really painful debt crisis. I think that was not on the agenda for European policymakers. And you saw with all of these Eurozone conferences that they needed more market pain to resolve it. The example I give you is the Brady bond scheme in Latin America. So had the privilege to know one of the architects, David Mulford, of the Brady bond plan, and he was the negotiator with all of the Latin American governments. And he said it took about 7 years to get the agreement. And he said the agreement only came when all of those countries were completely beaten down, and they realized that there was nothing else to do, that, you know, the debt crisis wouldn't go away.
Yeah.
So I think you're right in that sense. And this is when financial markets turn on you, it's really vicious. So I think the Chinese are between this point where they recognize the problem. The solution, I think, would be, it's very complex because they have this tight contract with the people. They have to keep an eye on this kind of idea of China as a dominant power, and having a debt crisis can upset that in many, many different ways. So I think it's just very difficult for them.
It's a big issue, isn't it? It's not obvious how, because like you say, they have a contract with the people, which means taking losses and cleaning up the system is very, very hard to do, and maintain sort of legitimacy as the party. Yeah. So it's not obvious they're going to take that option. So it becomes long and drawn out, which is interesting. So let's just bring this into land. Let's just talk about the US election. And maybe the French election. I don't think we need to talk too much about the UK election, because I don't think it's going to make that much difference.
Yeah.
But let's start with France and end with America. How do you think France plays out in terms of, as an investor, what do you need to think about as we move? So we're recording 27th of June. The first round of elections is this coming weekend, and then the second round is the week after. How should investors think about France and this election? What does it mean for their portfolio?
So anyone listening, Chris, in the last hour won't have picked this up in my accent, but I'm an honorary Frenchman. So I've lived in Paris for a long time, 13 years. My family is half French. Do
you have a French passport? Do you have a European passport? Well, you have a European one anyway, so probably it doesn't really matter, I suppose.
I am getting more and more questions as to whether I should get a French passport, and I think the next week or so will probably be decisive in that. But so I live in the center of Paris, and I see it's a great city. See many things happen there. I've just written a book on French democracy, which came out a couple of months ago with a French friend of mine. So we're in the sort of French
in the thick of it.
I'm doing an event next Friday at kind of the French Davos on democracy. So that's going to be an interesting context. From a market's point of view, I am sadly more pessimistic than many of the investors I've spoken to. I think Macron has done something unusual in that he has injured his country, and that's not something French presidents do. And this is a divisive election that French people do not want to happen. And his hope is that he would recompose the center. And what he's done, he's evacuated it to the two extremes. And From an economics point of view, neither of those two extremes is experienced in policy making. Neither of them likes financial markets. Neither of them likes investors. Neither of them likes Anglophone investors and the idea of globalization. And I think a lot of this is not sufficiently picked up on. So I'm fearing a kind of some macro shock of sorts, because the two scenarios now is you have a minority government led by the Rassemblement with some people from the kind of the right and maybe also the servants to give it a veneer of respectability, or you have a kind of, because and I don't think the far left will be in a position to form a government. You have a constitutional crisis with a sort of government of technocrats, and France is a hyper technocratic country. It's the most elite country I've ever known, which is why if you're not part of the elite, you get very frustrated and you have to go and protest. And I the more I think about French democracy, the more I understand that. So there's no good outcome, I think. The only good outcome is that you get this technocratic approach that just parks economic policy.
Is there not a scenario whereby that as you say, the sort of the right wing lot get in, and you have essentially you have a sort of a standoff with the president, and nothing really gets done?
You can have a standoff with the president. So I think Macron is massively unpopular as a result of this, and there are, on the radio yesterday morning in France, they had a constitutional expert talking about the dynamics around which he might resign. So that it's a tiny tail risk, but people are talking about it. And I think you could have that, and they could cohabitate for a while. And I think also France being the leader in Europe on foreign policy and the army, military, he is very much diminished now. So I expect other countries like Poland and maybe Italy to kind of have incrementally more power. So I think you could have that situation. And I think in that situation, the Rassemblement, if they're wise, they just wouldn't do very much on the economy, and they'd probably focus on things like security, immigration, which would embed their vote and credibility in the eyes of many French people.
Yeah, so actually, when we really boil it down to investing, one's watching those spreads of French oats, French government bonds over bunds. They've sort of been stable in the last week. They blew out the week before that. I think they got out to about 80 bips, didn't they? Something like that, from sort of 20 or 30 before the European elections, and Macron called the French election. So that's the barometer. Where might they go to? Would you have any sense on that? Because we know that the ECB is sitting there as a backstop as and when it chooses to, but we also know that they don't want to be seen playing politics. They also want to be seen to influence fiscal plans, and there's a level they intervene at where there's probably volatility and sort of in markets in general as a result of that spread widening. Where do you think? Do you have any sense on where it might go to? It's a difficult question, I know.
Yeah, it could. So I think the ECB is already quite politicized, actually, and that is, I think Christine Lagarde has played a role in that. She's not a career economist or central banker, and however, her political skills have been very useful at times, but nonetheless, the bank has become politicized. There is very little appetite within the ECB and other European governments to help France in the context of a Rassemblement government. And I think you probably want to get to a stage where spreads really get blown out, where other countries that are doing very well, like Spain and Greece, are beginning to suffer, and where it looks like one or two of the French banks are really in peril. So I think we're well off the ECB intervening. It would have to be kind of an emergency situation, I think, and also to institutional Europe and kind of the Europe of the center, that kind of crisis would be valuable, because it would show that markets don't like the extremes in politics, and we have to kind of, chuck them out effectively.
So, okay, so actually, if one was a sort of a speculative trader, that's actually probably a very good trade on the back. I mean, all the polls favor the Le Pen's lot,
Yeah.
and that hasn't changed in the last 10 days, as far as I can see.
No, I
So,
mean, I think they will be, they have the best, they'll probably have, with the help of others, 40 something percent in the parliament. Yeah.
yeah, so they win. And so, yeah, okay, interesting. So what about the American election? Let's end on that, because I know that, as I said, the clock's ticking. We've got a big election coming up in November. There are stark differences between Trump and Biden. What do you see as the key themes as an investor in that election?
So I think the key themes post the election, so they're both known quantities in terms of their policy, more Biden. And I think what doesn't get a lot of credit is just the coherence of policy across the Biden government between economic security, foreign policy. It's probably the most coherent government America's had in a very, very long time. And I think people would like that to continue. I think as an investor, you are probably more focused on Trump, and you're more focused on some of the noise and chaos around Trump. And I think the first thing I would say is I think he has much less scope on the upside this time than he did, when he came in, he cut taxes, and there was people were manically trading S&P futures around the news flow, kind of the US-China trade war.
Mm.
So I think it's probably a lot less upside in that, and I think valuations as well, just generally speaking, are at a peak. I think an early trade will certainly be around other currencies like the yen. A lot of the Trump advisors, I think Robert Lighthizer are one of those, writing books about how other countries are effectively devaluing to hurt the American economy. So I think there are. And I think you was it last Friday, Chris, you did something on currency
Yes.
volatility and the long run value of the dollar. So actually, I think Trump will be a test of that if he gets in. And you might want to have a basket of weaker international currencies versus the dollar trades on currency volatility. So that's definitely one. The other one, which will be controversial, is what is Trump going to do about the deficit, and how do you play that?
Mm.
Because the theoretical economists at the IMF have said that, well, the US could resolve its deficit overnight if it just had the same tax rates as the other G7 countries, which we know is politically impossible in the States. So he's in a difficult position, I think, in terms of the deficit, and whether the bond market begins to express a view on that. And I think some of his public comments around that could become quite chaotic.
Yeah. But also the idea, to add to that, not to interrupt you, sorry, but to add to that, the idea that these comments that are coming out from his advisors about managing the Fed and changing the guard at the Fed, which plays into bond issuance and managing the bond market, basically. So that could be quite interesting in terms of where it plays into the currency.
Exactly. And again, you and I have probably, our first taste of central banking was watching Alan Greenspan, where the Fed was sacrosanct, as it was under Ben Bernanke, and the Fed was clever and intelligent and on top of the markets. So the idea that because so Trump has effectively politicized the Supreme Court. So the idea that he would do the same to the Fed takes us back to before the 1970s in America. And that's the kind of thing I think that people might enjoy it at the start, because they might say, oh, well, there's a cheap money trade going to happen here, and that all tail risks will be flattened. So I think that will be the first reaction, unfortunately, for monetary purists of a Trump government, that he's going to kick out some of the economists and the independent people. But I think very soon could actually lead to big dollar volatility, big rate volatility as well. And again, the US is up against it in terms of its debt levels.
Fascinating. Well, I mean, Mike, that's been tremendous. You know, from the sort of 1600s through to a couple of bouts of globalization to the levelers to modern day investing and how to play elections in France and America. Absolutely wonderful. Thank you very much for a very wide ranging,
Thank you, Chris. Yeah, enjoyed it.
fascinating discussion. I really appreciate it, and thank you for your time. Really
Great, thank you.
appreciate it.
Thanks.
Thank you.